Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds, the big players in the market, and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can notice is that we have a market that at the moment is testing and rejecting precisely the previous monthly resistance, which is now turned support. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the zone with this impulse, and at the moment the market is retesting the area with the creation of this wick and already rejecting it to the upside. Now, as the market is testing and rejecting previous monthly resistance turn support, we could expect more bullish continuation to be created away from this level. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, this is where things get quite interesting. In fact, we can notice how the market also here on the weekly is testing precisely the previous weekly resistance turn support. From here, all this previous rejection to the downside was created. After that, the market broke above the zone, and that previous resistance was turned support at this level. As the market is currently testing this previous resistance turn support, we could expect more bullish continuation to be created away from this level. We can also notice how the market has just created a very clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we look closer in this case, we can notice how the market stopped precisely at the 0.32 of the Fibonacci taken on the weekly impulse leg, which in this case was lining up precisely with the previous resistance turn support. Now, this means that actually we had confluence of support inside of this area because we had both the previous structure resistance turn support, this horizontal level, and also the 0.32 Fibonacci, both lining up in the same area of price. And when you have confluence of support, that is a quite strong level that you expect the market to test and to reject to the upside. And in fact, that is exactly what the market did also in this case. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, first of all, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, after this impulse, I explained all the reasons for which we could expect first a correction and then the continuation higher. And again, that is what the market gave us. From here, I made another analysis explaining all the reasons for which we could expect a correction and then the creation of a higher high, which the market gave us again. And after the creation of this correction and M pattern from here, I explained all the reasons for which we could expect this move to the upside, which the market gave us, then the correction and the creation of a new daily higher high. And again, that is the move that the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, from a daily standpoint, what kind of price action and structure we have? Well, continuing here with our analysis, the first very important thing that we must notice is that at the moment this market is testing exactly the previous daily high. From here, all these rejections to the downside were created. And what we can see at the moment is that the market is trying to break above this level. Now, if the market will not successfully break above this zone, then we have to reevaluate the entire situation. However, in this analysis, I want to focus on what would happen essentially if we actually get this break, which is quite probable as the market is pushing it through the level. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, and we check the data precisely for gold, what we can see is that with the last reports, net positions have been massively increased. We went, in fact, from having 71.4k net positions all the way up to having 155.3k net positions. Now, what this shows is that institutions have been moving to the bullish side for gold by increasing their longs and decreasing their shorts. In fact, what we can see here is that longs from an institutional perspective went from 220.3k up to 254.3k, and shorts got decreased from 148.8k all the way down to 98.9k. So clearly, institutions have been adding longs and closing shorts for gold, which makes gold stronger. So that is also why I want to focus on what would happen if we get a break above this level. Now, if we get the break, what we would have is a shift from having this level acting as resistance to having this level acting as support, because what we know is that in the market, previous resistance, once it gets broken to the upside, becomes support. So if and only if we get a break above this resistance, at that point, on the retest of this previous resistance turns support, we would have very good probabilities of seeing more institutional longing. And if we get more institutional longing instead of this level, that would further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break on the retest, how I could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.